Hey, in this video, I'm going to talk about the Earned Income Tax Credit. They also called Earned Income Credit. So they are the same thing. This is for the year 2022, this year. So the maximum credit amount is $6,935. So almost $7,000 credit. So let's see what is the Earned Income Tax Credit. The Earned Income Tax Credit is a refundable tax credit for most people who work but do not earn high income. First, you have to know the Earned Income Tax Credit is refundable. What does refundable mean? Is eligible taxpayers can receive a refund with this credit, even if they have no filing requirement, or no tax, and had no income tax withheld. So basically say, even you don't owe any taxes, you may still get the credit. So if it's non-refundable, it's only to reduce your tax amount. However, because it's refundable, even you don't owe any taxes, the government will give you this money. So that's why it's a very valuable tax credit. The purpose of this credit is to reduce the tax burden and to supplement the wage of the low-income working family. So one thing you have to know, you have to working family. People have to work. So they have work, but they didn't make that much money. So that's why this credit is used to reduce their income, reduce their tax liability, so increase their income. So that's the purpose of the Earned Income Tax Credit. One very, very important thing to note in order for you to get this credit, IRS said that all the taxpayers and the dependents must have a valid Social Security number by the due date of the return. Due date of the return usually is April 15 each year, right? So the due date of 2022 tax is April 15, 2023. Include extension. Extension usually is October 15, 2023 to claim the credit. So basically say if you have newborn child, so gonna apply for Social Security number. So you have to do as soon as possible, because if you want to get this credit, your child has to have a Social Security number. So that's very important. Okay, let's look into it. For 2022, are you eligible for Earned Income Tax Credit? So in order to eligible for the credit, first thing we just talk about, you have to have an earned income. Earned income is job income. You have to have a job in order to get this credit. We're gonna talk about earned income detail later. Income, the second requirement is your income cannot be more than the maximum limit. We're going to talk about this as well. What is the income? Is the same with the earned income? Then what's the maximum limits? So here just because there are many different limits based on your filing status and income level. So the one thing just want to say is this is maximum income. If in 2022, if your income is more than this amount, almost like a $60,000. So basically, if in 2022, if your income is more than $60,000, so then you can move on and you are not eligible for any earned income tax credit. So yeah, that's you. Then you don't need to pay attention to this. So then you move on. You are not eligible for this credit. So if you below this amount, you can learn more about it. You may be eligible for it. So then you have to meet the earned income tax credit eligibility requirement. There's a list of the requirement based on if you have a dependent or not. So there's a list of the requirement you have to meet in order to get this credit. We will talk about all of this. So let's look at it. 3 income tests: earned income, adjusted gross income, investment income. So there are in this, they say your income cannot be more than the maximum limit. So I'm going to talk about that maximum limit later. So 3 income, I want to talk about it. I want you to understand what is earned income, what is adjusted gross income, AGI, what are those investment incomes, because all those income, they have a limit. If your income is more than those limit, you're not eligible for earned income tax credit. Okay, let's talk about what's earned income. Earned income, as I said before, is job income. So basically, it's the income usually show up on your W-2 on the box 1. So when you're working for a company, working for any other employers, so usually those type of income that called earned income. Here, IRS give you a list. Say earned income includes this list of those income. Then doesn't include this side. Let's go one by one. Earned income is like a taxable wages, salary, and tips. Then you can see they also include taxable long-term disability benefit received prior to minimum retirement age. So basically this one says, someone get injured, then become disabled, so they receive long-term disability income before they will retire, right? So when they receive those type of disability benefits, they are considered earned income. Even this disabled person doesn't go to work to earn those income, but they still count as a earned income. So you can see it's a little bit different concept. So others, here I just want to mention, say, here is prior to your retirement age. Once you retired, so those disability income is no longer considered earned income. They are unearned income, so no longer eligible as a earned income to claim the earned income tax credit. That's something you can see both disability payment here. On the earned income side, the next one is net earning from self-employment. So if you are not working for employer, then you yourself is you self-employed. Let's say you drive Uber, or you doing YouTube, right? So that would consider a self-employment income. Those income also is eligible for as a earned income to claim the earned income tax credit. So another thing I want to mention this called non-taxable combat pay election. So here just say I said you can elect to include your non-taxable combat pay in earned income. For the earned income credit, the amount your non-taxable combat pay should be showing up your W-2 in the box 12 with a code Q. So this one basically because those if you working in the army, you're active military member, you usually get combat pay. Those usually is not taxable. So but you have the choice. You have the choice to add this to your earned income to claim the earned income tax credit. However, I will show you later. These, when you choose to add it, they may increase or decrease your credit amount. So because this the credit, the way they design it, it's not the more income you have may increase or decrease your credit amount. So so if you are in this situation, you should run your number twice, with this added, without this added, see which one give you higher earned income. So then you can then you can choose the choices. You can make the choice, should you add the combat pay or not. So anyway, so this is, you can see those you can see have others things here. Those consider as a earned income. But for most people, your earned income is your wages and salary, or you have a self-employment, income. That's considered your earned income. Let's look at the unearned income. So basically, those are not job income. It's most of the time it's like for first one is interest and dividend. It's like investment income. Then the next one you can see, if you have a pension, annuity, those thing is you have to understand your unearned income are taxable. Most of the time they are taxable, but they are not eligible for you to claim the earned income tax credit. So you have to, remember this. Some people, they get divorced, they may receive alimony and child support. So those are unearned income, is not eligible to claim the earned income tax credit. Then also very, very common one, say unemployment compensation. Your unemployment compensation is taxable at the federal level. Maybe states tax it as well. However, your unemployment compensation is not going to be eligible for you to claim the earned income tax credit. All those things I'm going to show you later. Even earned income, you have to have an earned income in order to get your foot in this application to claim this earned income tax credit. However, if you only have those type of unearned income, you won't be eligible for claim those credit. But all those unearned income if you have additional unearned income on top of your earned income, then may have implication to increase or reduce your earned income tax amount. I'm going to show you how. So you just see that I showed you what it was earned income. So here is the form 1040. Then 1040, on the 1040, that usually your earned income gonna show up on the line 1. This is wages, salary, tips, so your W-2 income. So this will show up on the line 1. This is your earned income. IRS will look at this number. You first have this number exist in order to claim the earned income tax credit. Of course, if you have a self-employment income, you will show up on the Schedule 1, so on other box as well. So for most people, it's there on the line 1. Here, then I want to show you another income called adjusted gross income. This is line 11. This number is very important to you, because for many IRS deductions, credits, they usually use this adjusted gross income. So here you can see they this person file 1040, they have some dividends income $5,000, then have some capital gains $5,000. So add to their earned income together, they become their total income. They don't have any other income, so they become their adjusted gross income. You can see their AGI is $60,000, and this earned income is $50,000. I just want you to understand your earned income can be different from your AGI, adjusted gross income, because both of those numbers going to be used to determine what's the amount of your earned income tax credit. So remember, first is your earned income, second is your AGI. So both those income number very important to you. Then now I'm going to introduce you another investment income. So we previously talked about the interest dividend is your interest is your part of investment income. Then you have a capital gain is earned is investment income. Then you have a royalty rental income. If you rent you have a real estate rental income. Most of the time, if you just rent your home or you rent your apartment, something like that, you are not in the business of rental. Most of the time, is this not considered your self-employment income, is considered rental income, and they are not. This is a part of investment income, and it's unearned income. And you have a passive activity if you invest in some passive company, you get a small portion. Partnership, you get a small portion of the dividends, stuff like that. That will consider passive activity. So anyway, all those things is consider investment income. Why I want to show you here, because there's another thing called investment income. Investment income has to be less than 10,300 in 2022 in order to qualify for earned income tax credit. So here I'm just show you previous the 1040. Then you can see those other investment income. So now why I talk about all those incomes, different income. Here, this is 2022. This is the income limit. Here they find the maximum AGI, investment income, and the credit amount for 2022. Here they may only say AGI. However, they use both earned income and AGI. So I'm going to show you in a minute. So those limits apply to both the earned income and the AGI. First, let's look at all those limits. The first column is your child or relatives. So you basically your dependent, your qualified child, right? So how many do you have a qualified child? You don't have 0. You don't have any. You have 1 qualified child, 2 qualified child, 3 qualified child. And what is your filing status? Your filing status single, head of household, widow, or widowed. You can see here there's no married filing separately. Married filing separately is very special. Most of the time, they are not qualified to claim earned income tax credit. So just you can see there, this is their eligible filing status here, and the married filing jointly. You can see how to look at it. Say if you let's say if you are single, you don't have any child, then your maximum credit is $560,000 if your income has to be less than your maximum income has to be less than 16,480. Then this is filing status is single, head of household, widower. So then if you're married file jointly, your joint income cannot be more than 22,610. So both those limit apply to AGI and your earned income. IS will based on those your income, based on your earned income and the AGI. If they are the same, you will find the 1 tax credit. So anyway, let's look at if you have 1 child, your 1 child, the maximum credit you can get is 3,733. So you have a income maximum limit. If you are single, head of household, widowed, so your maximum income cannot be more than 43,492. So then you for your married file jointly, your maximum income cannot be more than 49,600. So if you have 2, 3, so your maximum credit is those much, over $6,000, and your maximum income cannot be more than those. I know it's a little confusing. However, it's just you just remember, if let's say if you have 3 qualifying kids, 3 and more, this actually 3 and more qualifying children. So if you have 3 qualifying children, your maximum income, joint income, has to be less than 59,187 in order to qualify to apply for the earned income tax credit. But can you get the maximum amount? So there's a table you have to look into in order to find it. So as I said before, here just have to understand those maximum income limit is for both earned income and adjusted gross income. They must both meet of those things. So quick examples have so married file jointly have 2 qualified children. Okay, married file jointly is this number. So your earned income, your income cannot be more than 55,529. So let's say your earned income is $50,000, right? 50,000. I'm missing a zero here. So $50,000, and your AGI is 60,000. So you can see your AGI is greater than this maximum amount. Then even your earned income is less than this amount. You still not qualify for any earned income tax credit because your AGI is greater than this amount. So that's those again. You have to understand the earned income and the AGI both cannot be more than those maximum income limit. I know, I'm sorry. It's a little bit confusing, but you have to just understand that. Here, then, the investment income limit, that earlier I talked about investment limit. So that's why they have an investment. So if you have an investment is more than 10,300, you are not qualified for any earned income tax credit as well. So basically why they do that, so if someone, they have investment income, so they must have a, quite a lot investment, and so they kind of, not that poor, and so they probably not need this earned income tax credit. That's why they kind of eliminate all those people have investment income to be qualified for those credit. So anyway, so that's 3 income test. Your earned income and AGI have to be less than all those income limit based on your filing status and how many qualified kids you have. Then your investment income has to be less than 10,300. Someone, let's say, someone, if they, let's say they're single, have one qualified child. So if their earned income is only $20,000, however, if that person has investment income, let's say $15,000. So even the earned income and the AGI below this amount, but because the investment income is more than 10,300, so they are not qualified for earned income tax credit as well. So you have to look at the 3 income, see if they are qualified. Okay. So let's just say how earned income, the number works. For example, married file jointly with 3 kids, qualifying kids, right? So this one gonna be income. If your income is 0, then your earned income tax credit is 0. If your income is the maximum amount allowed, 59,187, that's a maximum income limit, then your earned income tax credit gonna be 0 too. So this is how that income gonna be. Say if your income is $9,000, then you will get an earned income tax credit $4,061. So if your income increase to your income, if it's between 15,000 to 25,000, you would receive the maximum earned income tax credit 6,935. However, as your income increase to 45,000, you would get earned income tax credit 2,608. So those numbers are from 2021, so maybe a little bit off for 2022 because the 2022 table hasn't coming out yet. This is in November. I'm recording this in November 2022, so so those numbers haven't coming out yet. So I'm just say it's not exactly this number if you make a 45,000. So it's a little bit off, but it's close. So this is 2021 number. I'm just try to show you. So first, when your income, as your income increase, your earned income tax credit may be increase. It increase as well. So when you reach the maximum amount, after that, so as your income increase, your earned income tax credit may decrease. That's why I'm trying to say at the beginning. So when you there's a military combat pay can be added to the earned income to determine the earned income tax credit amount. So can be a good thing, can be bad thing. If your earned income is in here, you added to here, increase the income will increase earned income tax credit. However, if your income here, you added to it, you add increase the earned income, maybe decrease your earned income tax credit. So that's why you have to run both number, see if you should add the combat pay to your earned income to get the earned income tax credit. So that's something there. That's all the numbers. Let's look at the eligibility. I know that's a lot thing, okay? So this is eligibility requirement for earned income tax credit. They have a part 1 rules for everyone. Part B rules for you have a qualifying child. Part C rules if you don't have any qualifying child. Part D earned income AGI limit. So this is the AGI limit I showed you earlier. You can see all the numbers here. Yeah, you can see exactly all the numbers here. So we don't have to look at the part D. We just need that part A, part B, part C. First, rules for everyone. I mentioned this earlier. Say taxpayers qualifying taxpayer and qualifying children must have social security number is valid for employment by the due date of the return. So when you to get your social security number, the social security card usually will tell you that it's valid for work. They have those words there. There are some social security cards saying you are not valid for work. So those things are not qualified for apply earned income tax credit. So you have to know that first. Then filing status cannot be married filing separately unless you meet some exception. Okay, so here there's an exception. So basically, if you are married filing separately, you have to be considered first. You have a qualifying person. If you are single, if you don't have a qualifying child, so you basically here you are not eligible to claim any earned income tax credit. So then on top you have a qualifying person, then you're not living together with your spouse for last 6 months. So you married filing separately, your spouse cannot live with you for the past 6 months if you want to apply for earned income tax credit. So yeah, if you are married filing separately, that's a different rule here. Okay, the next is must be U.S. citizen or resident aliens all year. So you basically have to be U.S. citizen or resident aliens all year. Then cannot file form 2555. So basically, if you file this home form, you are not eligible for earned income tax credit. Investment income be less than 10,300. We talk about this. Cannot be qualifying child of another tax person. So yeah, that's the part A. Part B rules if you have a qualifying child. So qualifying child, later I'm going to talk about. So in a dependent test, there's a qualifying child test. I'm going to show you later. Say child must meet the relationship, age, residency test, and joint return test, but not the support test. The child doesn't have to be your dependent. Because this is a requirement within the dependent qualifying child test. I'm going to show you later what does that mean. Qualifying child cannot be used more than 1% to claim the earned income tax credit. So basically, your qualifying child cannot be used by another person. Let's say your ex-spouse. So that's something. The taxpayer cannot be qualifying child of another person. So if you cannot be like a dependent to your parents or any other person. So that's what I try to say. So basically, that's it for part B. You have a qualifying child. If you don't have any qualifying child, the requirement is you have to be at least 25 but under age 65 of the December 31st. So you have an age requirement. If you're younger than 25, you are not qualified. So, but if you are younger, let's say you are 24 years old, you have a qualifying child, that's okay. You can claim the earned income tax credit. But if you don't have any qualifying child, you have to be older than 25. So that's age requirement. Then the same, you cannot be dependent of another person, must have lived in the United States more than half of the year, cannot be qualifying child of another person. So that's the requirement here. So I'm gonna mention the bottom here, say taxpayer cannot file an amend return to claim the credit for the year they did not originally have a valid social security number. Well, basically say you have to have a social security number in order to claim the earned income tax credit. Let's just say you will qualify for earned income tax credit last year 2021, but you didn't have the social security number. This year you applied for the social security number, you have the social security number. Can you amend your return to get the credit? No, you can't. You cannot. So that's a very important that you to go to apply social security number first, then to file your return. Yeah, that's just additional things. For a couple file joint return, only one taxpayer has to meet the age requirement. So yeah, so for the age, let's just say if you are married, file jointly. So let's just say wife is 24, husband is 26. That's okay. You are eligible to to apply earned income tax credit as long as other requirement meets. Earned income, as I talked about earlier, earned income and AGI, you can see here they said your earned income and AGI must be less than this. So yeah. This is when they taxpayer have dependents, have qualifying kids, this is a test for dependents. Basically, you have a qualifying children, so you are not gonna look at that side. So here you dependent test. This one is like before you can be Canadian and Mexico residents, but for earned income tax credit, you have to be U.S. citizen and residents all year in order to do this. Then you must meet the relationship test for qualifying child. So who can be your qualifying child? Can be your son, daughter, stepchild, foster child, then your brother, your sister, half brother, half sister, and step brother, step sister. So those people can be your qualifying child. However, there's age. Your qualifying child must be under 19 and younger than you. So basically, if you claim your brother sister, they have to be your younger brother and younger sister. Or if it's under age 24, is a full-time student and younger than you. So that's have a relationship, have an age test here. The child must have lived with you more than half of the year. Then also for the earned income tax credit, that the child not only have to live with you for more than 6 months, they also have to be live in the United States with you for more than 6 months. So that's the things. However, for earned income tax credit, there was no support requirement. So no support requirement here. You don't have to provide more than 50% the support. Also, number five here is two. If your qualifying child married file jointly, usually they are not qualified as a qualifying person. So you only look at the qualifying child. This side, qualifying relative is not eligible for as a qualifying person for earned income tax credit. I think that's it.